Good morning and welcome to the E-Invoicing and Digital Reporting, the clear direction of travel for global tax compliance. I'm Joel from the Earmark team. You can earn CPE for this webinar by using the Earmark mobile app. Download the app by scanning the QR code on your screen or search for Earmark on the App Store or Google Play Store. Unlike traditional webinars, Earmark does not use polling questions during the presentation. Instead, you will verify your learning by taking a short quiz. Once the quiz is available, we will notify you via email. You can use the app to take a short quiz and earn your CPE certificate. So don't worry about your polling questions or attendance checks today. Enjoy the webinar and look out for the email in a few days with a link to the quiz to earn CPE. We'll give people a few minutes to funnel in, and then we will get started shortly. Now I'm gonna welcome our speaker today, Alex Baulf, sorry, and he's gonna take it over from here.
Thank you so much, and good morning, good afternoon, good evening to everyone watching this live today, but also on demand. Welcome to this Avalara webinar with Earmark entitled E-Invoicing and Digital Reporting, the clear direction of travel for global tax compliance. By way of background, my name is Alex Baulf. I am the Vice President of E-Invoicing at Avalara. My background is I have almost 20 years experience within global indirect tax, so within UK value-added tax, international indirect tax, as well as state and local tax in the US. Prior to joining Avalara, I was within consultancy and tax advisory, working within the Big Four for Deloitte, and more recently with Grant Thornton, where I was a principal and a director and part of the global indirect tax leadership. I have experience on large indirect tax change management projects across people, process, systems, and data. And at Avalara, I lead on global indirect tax in terms of changing requirements around the world and the new direction of travel, which is digitalization. I lead our relationships with governments, tax authorities, and other influencer bodies. And I'm the head of product for our next generation e-invoicing and live reporting solution. I'm a member of the European Commission's e-invoicing advisory group, so advising the European Commission on changes to e-invoicing. And I also represent Avalara with OpenPeppal and GINA, which was formerly known as ESPA, the Global E-Invoice Network Provider Association. And finally, I'm a member of the board of directors of the Digital Business Network Alliance, which is a big new US e-invoicing initiative, which I'm going to talk about later on in this webinar. So firstly, a bit about Avalara, if you don't know about us already. We are a global tax technology company. We've been disrupting the status quo of global tax management since 2004. We provide a fast, easy, accurate way to manage transactional taxes, indirect taxes across the globe, from US state and local taxes, sales tax, through to global VAT and GST. And we have SaaS-based solutions, cloud-based tax automation to help businesses of all sizes, from very small SMEs through to the largest enterprises and partner ERPs in the world. We help our customers achieve compliance, reduce their risk, and streamline their processes. Ultimately, Avalara makes tax compliance less taxing. We have over 30,000 customers globally. We support about a third of the Fortune 1000. And we are truly a global company, headquartered in the US, but with offices across the globe in all regions, including in Brazil, India, and across Europe. So we have a number of SaaS-based compliance solutions for the entire end-to-end indirect tax lifecycle. So everything from registrations, obtaining a registration for VAT, GST, sales tax, fiscal representation within Europe, as well as obtaining a PEPL ID number for e-invoicing. We help with product classification, helping our customers classify their goods in an automated and scalable fashion to identify the correct HS code, which drives customs duty and import VAT. We're probably best known for tax calculation, our Avatax global tax engine, again calculating sales tax, VAT and GST. And last year we had 39.6 billion calls to our Avatax API. So our customers running through almost 40 billion transactions through our software, which is really global and scalable. And then invoicing, obviously the topic of today's webinar. We have a global e-invoicing and live reporting solution that helps our customers meet changing and challenging mandates across the globe. And we're going to touch upon that in more detail as part of this webinar. And then finally, the end of the compliance lifecycle, returns and reporting. We have SaaS-based solutions to prepare indirect tax returns across the globe for VAT, GST, and sales tax, as well as other ancillary returns, so EC sales lists, Intrastat, and other ledgers. And again, last year, Avalara's software helped prepare and process and file over 5.2 million indirect tax returns. So in terms of today's agenda for the webinar, we are going to start from the very beginning. What is e-invoicing? How does it differ from traditional paper and manual processes? We're going to look at typical e-invoicing models that tax authorities and governments are implementing, and we're going to look at some examples of those. We're going to look at the why. Why is this the clear direction of travel for tax authorities and governments worldwide? Why are they doing it now? And why are they going to continue to do this? We're going to look at the timeline, have a look at the last decade, 20 years, see which countries have already implemented e-invoicing, which countries were the trailblazers, what's happening now, what's new, and what's next. We're then going to look at why is tax more important under e-invoicing, the additional data tax authorities get, and why businesses now need to pay more attention to ensuring tax is right first time, every time. We're then going to look at some future trends, looking at what governments and businesses are doing, with e-invoicing and invoice data. And then finally, we're going to look at e-invoicing in the US. What's the current state of play and what's happening next? And I'm going to talk about the Digital Business Network Alliance, the DBNA, and some really exciting developments there. And we're going to conclude with the importance of tax data management. E-invoicing is often just seen as a technology play. In my view, every e-invoicing project is really a data project. It's based on good quality, clean, accurate data with correct tax calculation. So we're going to look at that and provide some tips on what businesses can do to prepare. So to begin with, what is e-invoicing? Well, to answer that question, we need to look at what is an e-invoice. So here we're looking at a digital document. So moving away from traditional paper and standard PDFs. This is data that is structured, data that can be read by a machine, and moving away from manual processes, data that, because it can be read by a machine, can be processed, interpreted, and posted by an ERP. At the other end, an e-invoice is structured data, typically in XML. And there are two main types of XML we see. We see UBL, Universal Business Language, and we see CII, which is called the Cross-Industry Invoice. But the problem with XML is that you really need a degree in computer science to be able to read an XML. So we all know an invoice has several different purposes. It's the core commercial document. It has a legal role. It's key for tax, particularly in countries that have VAT and countries where a company can take an input tax credit and recover the VAT on that invoice. But it's also primarily a request for payment, an accounts payable team, an auditor, someone in an accounts team, someone in a payments function. They need to understand who that invoice is from, what it's for, and the payments and remittance information. So that's often very difficult to view if it's just structured data. So we need a way of converting that into something that's human readable, that can still be visible by a human, by a person. And therefore, it's no huge surprise that we're seeing the hybrid document take a really key role within e-invoicing, something that is both visible and readable by both systems, machines, and people. And a great example of this is something called the PDF A3, which is not to be confused with a normal PDF, something that's been created or saved, scanned, or using OCR technology. But it's a special type of PDF, which is still a PDF to the human eye, but it has embedded XML within the document, so it can be processed by systems as well. So what is e-invoicing? Well, looking at that definition of a e-invoice, e-invoicing is the exchange of e-invoices between suppliers and their customers, between a business and its trading partners. But it's really looking at a consistent format of document with consistent content and the format of that data. That e-invoice is often sent via an open network, like the PEPL network. I'm going to talk about PEPL in a bit more detail in a minute, or via a government portal where it's actually the government or tax authority that make that invoice available to the counterparty. We still see some e-invoices shared via email, particularly the PDF A3, that hybrid document I just talked about. And we still see some EDI connections, so private connections between businesses and their trading partners. This was the historic approach to e-invoicing, in effect connecting just one business to a single trading partner, very heavy customization, a heavy lift with heavy professional services. And we also saw a legacy approach to e-invoicing through procurement networks, where maybe a larger multinational would insist, almost mandate, that its customers or its vendors would have to join a particular accounts payable or procurement network, often at a charge. But there's also a second side to e-invoicing, and that second side of e-invoicing is tax reporting. It's the reporting of tax and transactional data from an invoice to the tax authorities. And this is usually part of the same exchange of the e-invoice between a business and its trading partners, or it can be a parallel process where just the data from the invoice or a subset of the invoice data is reported, known as e-reporting or live reporting, to a tax authority. This is really granular information, and tax authorities actually have the ability to review, approve, validate, and in some circumstances actually sign and send that invoice to the trading partner. So moving away from the current position in the majority of countries where really a business has freedom of choice in terms of the format of the invoice. Under e-invoicing, it's typically mandated. It has to be this format. It has to be machine readable. It has to meet certain standardization, schematic rules to meet local legislation. But again, another big change, rather than moving to a position where a tax authority reviews an invoice periodically during an audit, it will actually have the ability to audit, to check invoice data every day, every time an invoice is issued. every time an invoice is received, because they're receiving this really rich, granular transactional data. And ultimately, what does this mean? Well, it means that the indirect tax compliance model is changing. The traditional indirect tax lifecycle is no longer linear. It's no longer a business raises an invoice. Periodically at the end of a month or quarter, it prepares a tax return. And then maybe a few months later, a year later, maybe even longer than that, a tax authority will come knocking at the door. Typically, an auditor in person. They will look at sample invoices. They may request some sample data. But the key word there is sample, because the future is no longer a sample. The future is every single transaction, every line of data in real time. The future is something we call continuous transaction controls, or a CTC regime. And this involves a tax authority using modern digital technology, for example, e-invoicing, to replace that historic post-audit model. And this will really change the way a tax authority not only audits a business, but how it identifies issues, errors, discrepancies, how they can spot fraud. It gives them the ability to insert themselves between a business and its customers and trading partners. It gives them the ability to validate the invoice before authorizing its delivery to the counterparty. So every transaction, that rich granular data, will be received and stored by the tax authority. So not only do they have the ability to review and approve and reject that invoice in real time, but they also have the ability to run advanced data analytics, machine learning, even AI on this huge data set that they've been receiving. And tax authorities have been on their own digital transformation journey. They've been investing in technology themselves. They've been upskilling their people. They've been investing in technologies not only to receive this data, but then to run all of these additional checks. So looking at different e-invoicing models, the first thing to say is they really do differ by country. There isn't one standard model across the globe. And this is one of the complexities with e-invoicing. So I'm going to talk about 4 or 5 different models here, the typical ones we see around the globe, but there are always slight variations. So the first one is called the post-issue audit model, or the 4-corner model, also known as the interoperability model. So typically under this model, a tax authority is not involved. If they are, maybe they're there just to set the rules, help onboard customers, be the local authority, to regulate this model. But they don't see the data, they don't review, they don't approve. It's really just the exchange of an invoice meeting a common standard in that country between businesses. And to ensure interoperability, we have what we call certified service providers sitting in the middle. So together with the supplier and the buyer, creating 4 corners. Hence, it is known as the 4-corner model. So a service provider like Avalara, which is a certified PEPL service provider, and with the Digital Business Network Alliance as well, we will take data from a supplier, from their ERP, via API or a connector. We will transform that data into the relevant standard for that model or that country, and then we will send that to the counterparty's service provider, the details of which are available in a central directory, and that service provider will again be able to validate the invoice before passing it back to the other business, the counterparty, the buyer. So this means that individual service providers don't need their own private EDI connections. It's scalable, it's global. And it's a bit like using a cell phone, a mobile telephone. There aren't any roaming fees. It doesn't matter if your trading partner, your customer, or your vendor is using a different service provider. You're no longer locked in to a legacy procurement network or a single e-invoice service provider. On a network like Peppol, it's an open network. So, lots of different choices of service providers. And as long as your counterparty or trading partner uses any certified provider, your provider has the ability to send and receive invoices to you. So this is really taking off. The largest open network globally is the Peppol network. I'm going to talk about that in a bit more detail shortly. Secondly, we have something called live reporting. So under this model that we see in Hungary has something called real-time reporting. There is no e-invoice exchange between the supplier and the buyer. That invoice can actually still be paper or PDF. But what the government and tax authority mandates is that every time that invoice is issued, that a subset of that data needs to be sent, it needs to be reported to the tax authority. So typically in an XML to an API. So this means that the tax authority have full visibility on every invoice that's been issued, even though the delivery mechanism, how that invoice is shared between the supplier and the buyer, could still be via email. It could still be by the postal service posting a paper invoice. We then move to genuine e-invoicing and live reporting models. There are two forms here. Both involve clearance, but one is what we call decentralized and one is called centralized. Really, the difference is how that invoice is exchanged and shared between the two businesses. So under the clearance model, which we have in place in Brazil and also in the Kingdom of Saudi Arabia under their new Fatura e-invoicing regime, every time an invoice is issued, before that invoice is sent to the customer, it is submitted to the tax authority, either the invoice or a subset of the data. The tax authority will approve that. They will send back confirmation to the business. In some cases, they'll give a unique code, a QR code, for example, to verify and validate that that invoice is valid, is legal, it's been approved. And only then can the business actually send that invoice on to its customer, either direct or to their service provider. We then have a slight variation of that, something called the centralized model, which is exactly the same as the clearance model, but instead of the service provider sending that invoice direct to its customer, it's actually the tax authority that goes one step further. They are the ones that make the invoice available to the customer. So we see this in Italy with our STI platform. We're going to see it in Poland next year with the KSEF platform. The invoice is actually made available within the tax authority platform. So a business can log in, they can see all the invoices they've issued and received. They can call the tax authority platform or portal via API to retrieve invoices. So again, we see this in Italy, we see this in Poland. We're likely to see this in more countries around the globe. And then finally, we see a bit of a hybrid model develop, something called the 5 or 6 corner model, which is looking to leverage an open network like Peppol, the 4 corner model, but sticking a tax authority in the middle. So having a CTC model, looking at a clearance model, but within the framework of an interoperability 4 corner model, which basically means a tax authority is both reviewing the data, approving an invoice, but also providing the infrastructure through an open network for the invoice to be shared, to be exchanged between trading partners. This is likely to be a popular model going forward. It's been announced this is going to be adopted by Singapore and Malaysia, and we also expect other countries to announce this in the coming months. And as Europe deploys e-invoicing more over the next few years, we expect this to be a common model across Europe too. So what is Peppol? I mentioned Peppol briefly. Peppol was originally a pan-European e-invoicing organization. It was a network and standard set up for public procurement, so business to government transactions. It was originally built to help meet the European e-invoicing standard, which is known as EN 16931, creating a compliant implementation of that standard and a network which would allow businesses to share invoices meeting that standard to government bodies, public authorities, governmental departments. Today, this has really grown up. It's no longer just for public procurement, it's for business to business as well. There are roughly 750,000 businesses and public authorities on this network. This is growing every day, and it's likely to hit 1 million within the coming months. It creates an open network where buyers and sellers can exchange invoices, as well as continue to meet local business to government e-invoicing rules. And today, it's no longer just a European network and organization. It's no longer an acronym. It's no longer the Pan-European Public Procurement Online System. PEPL is now very much global, and PEPL has been adopted in Australia, New Zealand, Singapore, Japan, and shortly in Malaysia too. On the screen now, you'll see an example of e-invoicing in Poland, the KSEF system. So this is the centralized model I referred to before. So this is the screen that a business which wants to log in and see the invoices that it's received will see. And they will click on the invoice list and they will see every invoice they've issued and received, with the ability to download a human readable PDF that's been created, as well as the local compliant XML, so the actual e-invoice that's been generated by the business and validated and approved by the KSEF system. And the interesting thing is, until that invoice is reported into KSEF, the invoice is not legal. It's not valid for tax purposes. So this really changes traditional AP and AR flows. It's not just a tax initiative. It really changes how a business does business, how it interacts with its trading partners, and ultimately how it gets paid. So why are government and tax authorities introducing e-invoicing and e-reporting? Well, it's really tax revenue. They want to maximize the tax take. They want to reduce what is known as the VAT gap. The VAT gap is the amount of tax that should be collected, but it's not. And that's due to a number of reasons. It could be non-compliance, it could be simple errors, it could be fraud. And governments see e-invoicing as this extra layer of transparency. They want to view every single transaction in real time, or as close to real time as possible. They want to move away from periodic checks on summary indirect tax returns like VAT returns, GST returns. It's really too little, too late. That summarized figures within a form, within a return, it's just not enough. It doesn't give them the detail they need. And as I alluded to before, tax authorities are on this digital transformation journey themselves. They've invested in the technology and now they want to take advantage of it. And they really see e-invoicing as that clear direction of travel, the answer to fraud, the ability to mandate the data elements that are on an invoice, the format, even the content that's provided. They will receive that in a common endpoint, in a common transmission method, and they even determine when that invoice needs to be sent. They have the ability to approve it, review it, sign it, and in some countries, actually share it with the customer, controlling what invoices are in free circulation. And this really builds up the ability for the real-time approval of invoices, as well as what I said before, validation, analytics, even the use of AI. So looking at the evolution of e-invoicing, I wanted to look at the timeline. So, this slide is always very fluid. A lot of these dates are changing almost on a daily basis. particularly as more and more countries declare their hand and announce new and upcoming e-invoicing mandates. But what I wanted to draw people's attention to is the left-hand column here, which is really the last 20 years. And what you'll see here is e-invoicing started in Latin America. It was Mexico, Chile, Brazil that were really the trailblazers of e-invoicing. And today, virtually every country in Latin America, South America, across the region has e-invoicing. It's just part and parcel of doing business in the region. And really where we saw e-invoicing in Europe, for example, it typically was just business to government, public procurement, or it was some form of digital reporting, maybe parallel to the invoice. But over the last couple of years, we've seen e-invoicing really spread across Europe. Italy was the first country to start mandating e-invoicing back in 2019, and that's now spread to all businesses of all sizes. And in fact, the mandate also covers the reporting of invoice data for invoices issued cross-border, so to a customer outside of Italy, but also invoices received from outside of Italy. So suddenly the tax authority have full visibility on every single transaction, including between related parties, which is very keen and key for transfer pricing. We've also seen more and more business to government mandates. So Belgium and Luxembourg have introduced new B2G mandates in recent years. But really the big year is 2024. In 2024, we are going to start seeing a tidal wave of e-invoicing mandates. From January, we're going to see a new e-invoicing mandate in Romania. We're going to see an e-invoicing mandate in Poland from July. We're going to see an invoicing reporting mandate in Israel from January, but with a light touch, with no penalties until the 1st of April. And we're going to start to see more and more countries roll out their platforms and their legislation. So looking ahead, over the next 2 or 3 years, we're going to have Spain, France, Germany. We're suddenly going to see the vast majority of European GDP covered by an e-invoicing mandate. And really, that will just continue. We're going to need a bigger slide because within the next 5 years, virtually every country in the world will have an e-invoicing or e-reporting mandate. We're currently tracking well over 100 different current mandates, future mandates, or changes to mandates. This is really going to become the new norm, how tax authorities will audit a business and how a business will interact with its counterparties. And this is only going to be accelerated by reform within the European Union. So the European Commission is currently debating the fine details of something called VAT in the digital age. And part of this reform is looking to remove the barriers for e-invoicing. So remove the barriers for countries mandating it, but also the barriers for business adopting this on a voluntary basis. So we're suddenly going to see more harmonization, standardization, all the way up to 2028 to 2030, when we're going to see mandatory live reporting of transactional data every time an invoice is issued cross-border in the EU between two EU member states. And that's going to need to be underpinned by mandatory e-invoicing. But that date is not the starting gun. It's really the finishing line, because before that date, we expect the majority of countries within the EU to roll out their own domestic e-invoicing mandates and own legislation. So really, this is going to spread to every region in the world. We're going to see e-invoicing in the UAE. We're going to see e-invoicing next year in Malaysia. Really, every region, every country, this really is the clear direction of travel. And this is a great quote from the OECD. It's a win-win. Better detection of crime, higher revenue recovery for tax authorities, but synergies that can make tax compliance easier for both business and tax administrations. There really is a recognition that if e-invoicing is adopted and the model is right, there are savings. There are savings in terms of compliance, more accurate invoices, better tax data, even less audit activity because businesses are forced to get the invoice data and the tax right first time. But there are also other reasons why governments are really mandating or pushing, incentivizing e-invoicing. There is a cost saving as well. And this is a great quote from the French government when they announced an upcoming mandate in France. They said the price of an e-invoice is less than the postage stamp compared with the price of a traditional paper invoice, which is more than 10 euros. There's a similar study in Australia that I think said a traditional invoice, paper, PDF, printing, posting, processing within Australia is about 30 Australian dollars, but to do the same with an e-invoice is about a third of that, about $10. So huge savings there, and a reason why a lot of multinationals are really keen to adopt e-invoicing, even where there isn't a mandate. So tax becomes more important under e-invoicing, and that's because, in effect, a tax authority has full visibility. They can also see both sides of a transaction. They can see the sales side as reported by the seller, but they can often see the customer's viewpoint, the input VAT that's being recovered by the customer. They can compare this reporting. They have full visibility. They can triangulate between different data sources. To reduce fraud, they can really look at the authenticity of the invoice issuer. That's typically evidenced by a digital signature that needs to meet certain requirements within that country. They can also check on the authenticity of the customer, which is typically evidenced by a VAT number or other master data. But it's because of all these reasons, it's critical to get the tax right first time. There can really be no errors in tax because it's not a case of will a tax authority spot the issue. A tax authority will see that data. They will see it in real time, often before the customer does. They will have full visibility on every transaction, every invoice. They can use data analytics to really drill down, spot errors, spot issues, and therefore you need clean, accurate, consistent master data. You can no longer have transposition errors if you're booking AP invoices. The tax authority would have seen the original invoice. They will know the true values. You can't suddenly use different exchange rates. And with all this data, we're going to start to see tax authorities move to pre-completion of tax returns. We're starting to see this already in some countries where the tax authority will pre-populate certain boxes on a return. They have the data, they've been supplied it by either the business, the taxpayer, or its counterparties, and therefore it sees itself as being in a position to prepare the return for review and approval. And ultimately, all of this is underpinned by accurate, real-time tax calculations. So we're suddenly going to see the importance of a tax engine more and more globally, traditionally used more in the US or by European, Asian companies to calculate US sales tax. Now, under e-invoicing, more and more businesses are going to have to look at their tax calculation policy to ensure they get their tax right on an invoice first time. So the invoice data that's shared with the tax authority, it's no longer just a tax rate and a tax amount. And in fact, we're seeing more granular tax information. So for example, we have a concept on an invoice called a VAT category code, which really codifies how an item is being taxed. This may have additional information such as the tax rate, but we also have exemptions and further granularity too. So we have official VAT exemption codes or VAT-X codes that provide clarity to the customer and also the tax authority on why VAT or GST or indeed sales tax hasn't been charged. These codes can also help with automation, so help automate VAT reporting, the posting of invoice data to ledgers, and they've also been designed to be compliant with European e-invoicing standards. So I mentioned Romania. Romania is mandating e-invoicing from January 2024. In Romania, the government system, the e-factura system, will carry out a number of different checks, several different verification and validation procedures on every single invoice that is issued, looking at the structure of the invoice, syntax checks, logical checks, semantic checks. They will be validating the issuer of the invoice, looking at the digital signature. They will be looking at the integrity of that invoice content. And even though initially the Romanian tax authorities have said there'll be no VAT checks, so checking the tax that's been calculated and charged on an invoice, these will be added. This will become the clear direction of travel. So where next? When I looked at the timeline, you would have seen that it was Latin America that was the first region to really implement e-invoicing. They were the trailblazers. So it's only common sense to look at those countries now and the tax authorities in the region to see where other tax authorities will go next. Now they're starting to roll out mandatory e-invoicing. Well, a great example of this, a great case study, is the CIAT, which is a regional intra-tax authority within Latin America. So we're going to see genuine collaboration between tax authorities. And what they've announced, the CIAT, a group of these national tax authorities, is that they're working with Microsoft, a big software company, to create a data center, to create a center of excellence for AI, artificial intelligence, to really take all of that granular data that the tax authorities are already receiving and storing through e-invoicing, and now being able to run the next generation of AI, really looking to identify issues, error, fraud, so they can really laser focus into the relevant transaction, into the high-risk businesses, so they can deploy resources in an efficient manner. And then I alluded to this before, pre-populated VAT returns. This isn't just something we'll see in the future. We're seeing this today. So Chile, one of the first countries to implement e-invoicing. In Chile now, the VAT return, it's 90% pre-populated by the tax authority. They prepare it, not the business. And really the business needs to review it, they need to validate it, they need to approve it. But really, that source of truth, that starting point in terms of the position on the amount of tax owed to a tax authority, that's really based on the data the tax authority already have. So again, really pushes the need to have complete, consistent, granular information, and that all invoices are flowing through the government e-invoicing platform. So I've been talking a lot about the state of play around the globe, with a particular focus on Latin America, Europe, and we've also looked at Asia Pacific as e-invoicing starts spreading across the globe. But what about a bit closer to home? What about the US? Well, currently there is no e-invoicing mandate, either at a state or federal level. We know there are a lot of reasons why. The US has one of the most complicated indirect tax systems in the world. There are over 10,000 different tax jurisdictions. We have indirect taxes at a state and local level, at a county level, at a district level. We have municipal taxes as well. We also have a lot of issues around what the government at a federal level can mandate and the difference between inter and intra commerce within and between individual states in the US. And what does that mean? Well, without mandates, without common formats, most businesses in the US have more commercial freedom to most countries in terms of the data elements, the fields they show on an invoice, the format of that invoice, how sales tax is displayed. It's not as rigid as typically in VAT countries. We also see more use of procurement and AP networks. Again, often at the request of larger customers. It's not uncommon for a large business to have to type in data or upload invoices to several different invoicing platforms and portals based on what their trading partners tell them to do. So the current position in the US is very mixed. We see EDI, legacy approaches to e-invoicing. The amount of invoices issued across the US is huge. A recent estimate puts it at about 25 billion invoices every year, but only about 25% of these are electronic. We still see a lot of paper invoices. We still see a lot of manual processes around payments. People still printing off an invoice, cutting off the remittance slip, stapling a check, putting that in the mail, in the postal system, to a processing center centrally. We see different e-invoice formats. There are probably over 15 core different formats in use. And when you look at different subsets of those formats, you can extrapolate that number a lot, over 40 different subsets. So this creates a very challenging, complex, diverse environment for e-invoicing in the US. And this was something the Business Payment Coalition has recognized. It can lead to a cost burden, forcing trading partners to join a particular network. Also creates a distinct lack of interoperability. It's very difficult for a business to adopt e-invoicing in a cost-effective manner. So, as a result of this, the Federal Reserve banks and the Business Payment Coalition worked on a market pilot to introduce a single standard and format and framework for the US and North American markets. And I'm pleased to say this has now been formalized as the Digital Business Network Alliance, which is a not-for-profit in the US to create this four-corner model. So very similar to PEPL, an exchange network. It's been termed the B2B digital highway, based on certified service providers in the middle, based on a global standard, UBL 2.3, which is an XML. And these certified providers will share invoices that meet this common standard between each other to pass them back to the relevant business. So the DBNA, the Digital Business Network Alliance, the network will be live in the next few days. It's operating an electronic delivery exchange network for use by all businesses across the United States, but also with a vision to get this to work cross-border too. So between the US and Mexico, the US and Canada, and vice versa. And really, it will become a compliant way to issue and receive invoices from and to US companies. So what does this mean to companies? Well, as I said before, we're moving away from this linear indirect tax lifecycle. It becomes continuous. It becomes 24/7, 365 days a year, 360 degrees. Every day when an invoice is issued and received, the company needs to be in compliance. It's sharing invoice data to a tax authority. The tax authority have full visibility. That needs to be underpinned by real-time, accurate, consistent tax determination and validation, underpinned by consistent, clean, more granular master data. And then when a return is prepared, that return is going to be built up over the period based on real-time data that's been shared with a tax authority. There may be augmentation, adding transactional data, T&E, B2C, maybe cross-border data that isn't included within e-invoicing. And ultimately, archiving becomes even more important because we're no longer just talking about storing paper invoices in a folder or storing PDF invoices in your ERP. Most countries that have e-invoicing require invoices to be stored in a safe, secure, mandated fashion for typically 10 years. So ultimately, my conclusion is the importance of tax data management. E-invoicing is not really a technology project. Of course, technology plays a key role, but that can be left to the service providers. It's really a data project. Businesses need clean, more granular tax data. They need to apply a correct and consistent tax calculation policy. So do consider a tax engine. You may need additional master data from your customers, from your vendors. But also you need to ensure that you have the right data elements within your ERP, within your business platform. So that can be shared with your e-invoice service provider to meet any local requirements. And I'd say UBL, Universal Business Language, is a solid, scalable base for businesses. This is very complex. I showed you those models. They vary country by country, and they change. Once a mandate is introduced, there are often changes to the schema, the contents, the scope of a mandate. There are variations across the format, the standards, the schemas, the APIs and endpoints that you need to connect to, the status of an invoice across the life cycle that you need to report on. There may be different rules on whether you need to add a QR code, whether you need to create a human readable version of that invoice. There may be different standards for digital signatures, different requirements on where the data needs to be stored or hosted. And so all this complexity makes this far too complex for ERPs and businesses to tackle and own themselves. And that's where Avalara can help. We're really providing a single way to comply. So we're working with providers of finance and accounting platforms to help future-proof their functionality for their customers. We're helping businesses continue trading, in effect, meet all these diverse compliance requirements from a tax perspective so they can still do business, they can still issue and receive invoices and avoid penalties. And then we're working with accounting and consultancy firms because their clients, our customers, want advice. They need guidance, they need support with selecting, implementing, and testing e-invoice and live reporting solutions. And then finally, the Avalara solution. We have created a next generation single scalable solution built on a single API, based on a single API ingest format, Universal Business Language 2.1, and Avalara will convert that data into the relevant requirement, the relevant format, depending on whatever mandate or whatever country the business is doing business in. We can send that invoice to the relevant tax authority, to the network. We can deliver that to customers. We have certifications across the globe. This is a fully cloud-hosted solution built for scalability and built in the cloud. I hope you found this presentation useful. I hope you've gained great insights into e-invoicing, the direction of travel, the what, the why, the how, and also the timeline when this is happening and what businesses, their advisors, and the business platforms that support them need to do to be compliant. Please do feel free to reach out to me, or please contact accountants at avalara.com. You can also visit avalara.com Please do also follow me on LinkedIn to receive regular global indirect tax and e-invoicing insights and updates. Thank you very much for watching and listening. I'm Alex Baulf, and it's been a pleasure to be with you today. Thank you.
Thank you, Alex. That was great. And thank you to all of our attendees. If you're interested in earning CPE, keep an eye out for an email in the next few days. It will contain instructions on how to take a short quiz through the Earmark app. If you have any questions or concerns, please email support@earmarkcpe.com and have a great day.